Welcome to another weekly update. The date is Sunday, February the 5th, and the Sunday after the market closed on the Friday. Start off always with the very big picture here, multi-year chart of the S&P 500, major stock market for the USA, and therefore probably the rest of the world, because everything else follows along with that. And the ongoing theme, the identified sort of earlier this year, is really continuing. As we can see here, that 40-week, the things I look at, the 40-week moving average pointing up over a 6-month period, and it is above the 70-week, that's the red line. The price of the overall market is healthily above the 70-week, and the RSI, this little gauge up here, is well and truly above the 55% line. So that is bull market all round, which is really an extension of what has already been a very long bull market after this break right here. And there's no reason to see it sort of slowing down just yet. If I zoom into the just a few year weekly charts, it's week by week action here. Anyone can see that that is an upwards trending market, and aggressively so. Due for correction, yes. When? Who knows? Let's look at the daily chart here, sort of day by day action here. And what happened earlier on is as I mentioned before, is this sideways action is quite healthy. It was just digesting its earlier gains, and as long as that channel held, that was fine. What had happened here is you can see this line of resistance here at about 2280. It's a very good chart to learn from this, and look at how it was. You had this wedge, you had this upper line of resistance here, and then you had this diagonal line here, that trend line there. So you had this kind of upwards wedge, and when you see those formations in individual stocks as well, it's a good bet that the upwards trending pressure is going to collide eventually with the sideways resistance, and it's going to push it higher. So that's what happened here. Burst up higher, and then it pulled back, but only just to form a resistance, which is now new support at 2280, and it behaved very well technically. Broke out, pulled back, hung on to 2280, and then on Friday, which is very significant how the week ends, up it goes again. The Dow Jones is through the psychological barrier of 20,000. There it is. That is psychologically speaking, as I've mentioned before, that's pretty big news, and I'm beginning to see signs of the public might be starting to be tempted back into this stock market, which, as I've said before, was the kind of missing ingredient that the bear needs. That kind of needs to suck as many people in as possible. That's not to say we're going to have a bear market anytime soon, but it hasn't really been a fully fledged bull market until, everyone and their dog got interested in buying stocks again. So that may be what's about to happen next. Short-term trend, though, which is what we're trying to look at for the week ahead, so we can try and be on the right side of things. Again, I've got no reason to say otherwise, but, this is an upwards trending market. So there's two plays away here. I'm looking for stocks that are going to go ride this trend, but I'm also getting some alerts set for stocks that, if there's a pullback, I'm going to be a good entry point. And one thing to look at is what I'm doing as well. Yes, I'm getting in this trend. I'm making some buy trades, riding the wind in my sails upwards. But also, at this stage in the game, I am identifying some weaker stocks to maybe just have one or two weaker stocks to short in my portfolio, and that will be a kind of hedge against any pullback that might upset my long positions. So that's all for the overall market update. I'll speak to the members separately in the private video then. I'll speak to you next time.